Don't forget to subscribe to Basement Tales. Just go on Apple, iTunes, or wherever you get your podcasts and hit that subscribe button. We release a podcast every Thursday. That way you'll be sure not to miss an episode. Welcome to Basement Tales with Sam Jackman, Charlie Einsman, Ed Grass, and Sandra Delancey. We have fun telling crazy but true stories about turning the worst possible property disasters into bags of money. Along the way, we'll pass along some important lessons to help you make cash on real estate. Sam and Charlie walked away from cubicle hell 25 years ago. Starting with no property, they created their own Clear Sky group of companies, sold hundreds of houses, bought dozens of rentals, and made millions in hard money loans. I'm Ed, a big firm litigator until muscular dystrophy made me find a hobby other than suing people. I miss it. Sandra's the normal person here with a real job plus some rentals. Her decades of friendship with the group, from office flunkies to property gurus, might help keep us all humble and focused on learning something. I wouldn't count on it.
Can we talk about the desperation of today's investors?
Yeah, and then what it's pulling out of the woodwork. Like the desperation, and these people, like the people I met at the street did not be named, who are participating in deals which they're not really owning, and fairy tale deals. Yeah.
The over exuberance of today's real estate investors. That's our topic, if that's okay.
Yeah,
that's a great topic.
That's good. And then how do these over exuberant investors jump into deals that have already failed? They're coming up with every kind of thing.
Well, why are they over exuberant? Because rates are low and deals are being done. What is it that's causing it?
There are no deals to be done.
Low rates.
So they're doing fix and flips at the tightest margins you've ever seen. And just like our courthouse bidders that we've talked about in previous podcasts, where our courthouse bidders are bidding things up to almost retail values, these other investors are buying wholesaler deals at values that don't make any money. So one of my stories I'll lead off with is a story that's going on as we speak. And of course, properties to be named later, people to be named later, if they give us their permission. And so this is a story of a client of ours that is a hard money client that's doing their first deal with us out there in some outer suburb of Maryland somewhere. I don't even know exactly where it is, St. Mary's County. And so I get a frantic call last night about doing a deal. And I get a call and it says, "Do you guys do deals in Panama City Beach, Florida?" I said, "Yeah, we could do a deal down there." I said, "It's going to be a slightly different process than we've done in the past." I said, we're not a direct lender to it. I said, "I'm going to have to just, broker it out." But I said, "We could definitely do the deal." So what are the numbers? It's a 249 purchase. It's a $500,000 ARV. It's fairly close to the water. I think it's one block off the water. And the renovation is about $120,000. And so why this is a very interesting story is because as we're talking, and this happened, let's say, I'm going to make them times, last night around 3:00, they literally jumped on a plane the next day at 9:00 and flew from the DC metro area down to Panama City Beach. And so they went and looked at the house, and they basically wrote up an offer on the house and had it accepted. And the reason why they know this area so well is because they own a condo down there. But they literally got on a plane that the next day, flew down there and wrote this house up. And so I thought that was very interesting. But that's the kind of stories that are going out there with investors these days. They're just going anywhere and everywhere to find these deals.
Was it a good condition place, you're saying, or it's going to need a lot of work? Or
120 grand renovation. And so it's down. The house is down to the studs, but it's in a golf course community. Of course, I'm relying on them to do the comps on their ARVs. I have no idea what the ARV is worth, but like I said, these investors will go anywhere and everywhere to find these deals these days because they're so far and few between.
Were you at all concerned about the fact that it's in Panama City Beach and this guy does not, reside down there? I know you guys have always kind of talked to us about, kind of staying local. You need to go and visit your property. You need to go and see it. So is that a concern at all to you?
Well, yes and no, but this guy owns a construction company. And so his condo, I guess, is vacant close by this property. And so he's literally going to throw a crew down there and he's going to have his workers stay in the condo, COVID specific, of course. It sounds like a COVID rehab. And so the workers are going to stay in the condo and they're going to fix this thing. This guy thinks he's going to be in and out in 3 or 4 weeks, which I don't know how the hell you do a $120,000 renovation budget in 3 or 4 weeks. Usually that's 3 months because, each thousand's a.
Well, the regulatory environment down there is a lot different. They can work every day of the week.
Yeah.
They can work all day. They can live up in the other place. They can work in shifts. It's a single family. Nobody is in any of those condos down there, so no one's going to care. And every one of the single families is all rented up due to COVID. So,
and it's off season due to the beach. It's off season. So
it's still plenty cold at the beach in Panama City.
Well, your recovery plan should be good. If for some reason they default, that can become the Clear Sky World headquarters.
Yeah, there can be. But the thing is, though,
All
this is
annual
just
meetings from now on.
Yeah, but for us, though, to get back to Sandra's question, honestly, in this case, we don't care. We do care, but we don't care. In that this is going to be a broker loan through Clear Sky Nation. So another company is actually going to be doing the loan and holding the paper. We're just actually doing what's called a broker kind of transaction for us. We're to collect our points and move on. But it's with somebody that we have a lot of respect for and that we use ourselves in the fix and flip business. So stay tuned. So we do care, but we don't care, right? So once the loan is underwritten, then it's out of our hands. So we're not really too concerned. But I am concerned because it's an ongoing client that does stuff with us up in this area, in the DC metro area. So we'll stay tuned.
Well, it's funny because I was sort of joking about the exit strategy, but you guys always talk about that. So for this type of thing, there has to be more underwriting than you typically do. But if you follow the requirements of the ultimate lender, and then your risk is limited because the thing has been, they ultimately have the note and you've done your portion of the job. So.
Yeah, and I've already pretty much did all the underwriting for them. I mean, in this case, though, they're going to have to fill out an application. I know the LLC primary members, he kind of told me what his credit score was. He was going to send me some picture of it on the phone, and he's in the mid 7s. And so those boxes are checked. The property's vacant. He's putting a combo box on it for me. So when the direct lender actually sends their appraiser to it, I could just dial it and have the appraiser go through the combo box. We already know the title company that's going to close it. So basically, the only thing I haven't done that I would normally do is I have no idea what that after repair value is because we don't have any access to the MLS comp. So our fingers are going to be crossed through their appraisal process, but I think it's going to be okay.
It is. I was down there. That price point works at that for a renovated home for the ARP.
Yeah, and so I don't know if I went over their numbers. So their numbers are like $249 purchase, a $120 reno, and a $500,000 out.
That's all good all day.
Yeah, so that was about $100,000 plane ride. So they spent a couple grand to get on the plane and maybe make 90 to 100 grand. So we'll see. And that's my story.
Well, there's a lot of deals out there that you would never, ever see in a more normal market. So a lot of these condo conversion deals are coming up. I've seen 2 in the last week. Personally visited one on H Street. That's all concrete pour. It's poured like a garage almost. It has retail in the bottom, condos in the top, retail about, maybe 6,000 square feet. And then 10 units of condos over top of it.
And that's getting foreclosed on?
Yeah, it's in trouble. It's a deal in trouble. They're can't get any more money from their lender and need someone to step in. And that's about a $5 million deal. And then I visited another property near Logan Circle, another failed deal. Partnership supposedly gone bad. One of the partners left with some of the money that have been draw allocations for construction, or maybe not. It's hard to know what exactly happened, but it's red tagged, which means it's tagged by the city as a problem property already and is accruing penalties. And it's just a shell and a concrete poured foundation. And the current owners are looking for a way out to refinance it, leave out one partner, come up with no money, and finish this project and leave with some of their money in place. And they have failed projects all the way down to Florida, that same owner. So there's a lot of changes happening in the market very rapidly, and how they all shake out and people's willingness to take risk on like a condo project or a commercial space is coming into play right now already. We're seeing that.
Yeah, and I'm glad you brought that point up, Sam, because as Sandra asked earlier, aren't we worried? And so the answer is, of course, yes, we're worried, because like Sam said, in that one particular project in Logan Circle on 10th Street, this guy has projects all the way up and down the East Coast. Now, Sandra, if the one guy wasn't able to answer my question, how is he going to get a project done in Panama City Beach, Florida, when he lives in Maryland? And he didn't have a good answer. We would be absolutely alarmed, because even projects in the DMV, if somebody lives an hour and a half to 2 hours away from their project, we're probably going to turn it down. Right. Because we want people to be very centrally located to the projects they're working on. And again, in the irrational exuberance from these investors, you have armchair quarterbacks who are trying to do fix and flips, living in California, trying to flip houses in the DC market, because I heard the DC market is great. You've got people in Maryland who do flips in Georgia, Atlanta, Georgia. I mean, this is an absolute mess. And that is the number one, a good reason why these projects are going to fail, is because these people are not centrally located to these projects, and they are not keeping an eye on them. And so us as lenders, we don't really keep an eye on them for them. They got to keep an eye on their own projects.
Right.
Yeah.
And a lot of these people looking to come into refinance failed projects have to carefully evaluate what's caused the failure to begin with, right? So
that was my next question.
Get completed, because even small problems can take a really, really long time to resolve in development. Once you sort of go sideways on a development, it can take a long time to unwind.
So what are you looking for? So these couple of projects that you just mentioned, the one on, over on H Street and one in Logan Circle.
Yeah, they'd have to have money in the deal. They would have to have a lot of money to put into the deal. That would mitigate our risk and show us their level of commitment to getting it completed. And when they start talking about putting in like 2% into the deal, then that's not 2% into a deal that's already underwater and damaged. No, and then want us to bear all the other risk. That's a big no. Yeah, because even if the numbers work on the ARV, their motivation to complete when faced with a problem is about zero. And the problems you're faced with in a larger scale development in a highly regulated environment are not something that you would be willing to do. You would be willing to deal with if you only had $50,000 into a deal or something. Yeah. You just walk away as soon as you saw them. You just leave. Yeah, because it's so hard to fix.
Sam was saying, you have got to have a little bit of money in the deal if you're going to resurrect a bad project, because we want to make sure that you're committed to this project, because we don't want to have to take that sucker over, because that's going to spend a lot of, not really my time, but it spends a lot of Sam's time unmessing up a project, and that takes away from our core business. And so that's not too cool.
But let's say I'm coming in as a Charlie or a Sam, and I have this deal that I need to assess as an investor. I'm talking as I'm the real estate investor. What are you guys looking for? I heard you say kind of skin in the game. Is there anything else? Are there some deals you're just going to walk away from?
The next thing that we look for is we need to understand who the contractor is that's going to execute on that deal, and we need to understand their track record. So the one particular deal in Logan Circle that we were talking about, that box is checked. We know the contractor. We know how he works. And so we're tight enough with him that we can manage the contractor, and we feel that he can get the project done. So that box is checked, and that's how we would normally start. But the next thing that needs to be unwound on this particular deal is Sam talked about a red tag on the property. Well, that means that they got a stop work order. So the first thing you got to do is understand the stop work order. The next thing you got to understand is how much is the fine that's been accruing on that stop work order. And the third thing you got to understand is how do you undo it and then get the project going. So that kind of throws a little bit of a curveball into it. But those stop work orders, especially in Washington, D.C., really mess up a lot of people. Then the next thing we got to understand too, and I don't think Sam brought it up, is the DC tax rate a vacant tax rate, or is it now a blighted tax rate? Now you've got to kind of look at that and understand what that looks like. So there's a lot of different ways, but as long as a contractor, as long as that box is checked, then we're okay. At least the first part of it.
Yeah, those variables, like the city variable you talked about, pretty much anywhere, but DC especially, what is that stop work order for? It can be for something pretty minor, or it can be for something pretty major. But when there's discretion in a third party of any kind, through no fault, let's say the city is perfectly well-meaning, but they don't have money in this project. They don't have the attention. They've got COVID to deal with, and all of a sudden your variables become unmanageable. Hopefully, like you say, the contractor or other people, you can manage that risk. That comes back to the irrational exuberance point that these people are chasing returns in a higher risk environment. And I mean, do you guys, some of these people, do they just have giant pots of money that they don't know what to do with? They figure, I got to get deals.
They don't have work for their teams and for their company. And so this is just puts them into a crisis mode, right? So then they start saying, well, even if I don't make any money, at least I'll keep these people busy. Maybe the market will tick up 5% because the rates are going to continue to be low. And the demand is so strong. So they're willing to bet on the future performance because they don't have a fix for their current situation, right? They don't have cash flow to sustain what they've been doing, right? So then they're thinking, oh, well, am I going to lay people off? Am I not going to show up? I can't retire yet. And so they're just in a complete quandary on what to do. And so it leads them to even more irrational behaviors.
I see.
Well, they're just like grasping to just save themselves.
Well, and that comes back to again, that variable thing. I know you guys have a very lean structure. You have some top people that work for you, but you don't have, say, a staff of 20 who you have to generate a certain amount of income just to keep people's mouths fed, as it were. And so, yes, I could see where you'd be more desperate, especially if you don't have a lot of capital reserve. You got to keep deals going, or what are you going to do? Lay off good, presumably they're good people that they have.
Yeah.
They don't want to be mean or whatever. You don't want to lay off your good people. It's hard to get them back.
So we've also seen change in the type of buyer. When Charlie and I started doing this 2005, investors would come in who wouldn't get their hands dirty. They'd hire a contractor and so there would be a profit structure in an auction purchase where that contractor would be paid. But what we saw over time, as people became more qualified, a lot of the contractors are immigrant contractors, and they became more qualified in what they're doing. They also aggregated more resources, so they have more capital to deploy, and they themselves now understand how to get a loan. A lot of them come to us for a loan, and it's great for our Clear Sky Financial business. But if you're going to auction to buy, now you're competing against people who are actually delivering the work product. A lot of them will even go out and get the real estate licenses. These people are not unsophisticated, and they want to be able to control as much of the cost structure as they can. And they compress that margin down just about as thin as you can get. So they've got illegal people working for them at low wages. They have a business that's legally operating and buying properties and doing construction, and another side business or a family member who's got a real estate practice, and they're able to deliver all of that. So when they go to the auction, your margin, even when everyone's competing with the maximum amount of information, is extremely thin, and they're picking up margin where they're keeping family members employed and all this sort of stuff. And so it's a different mindset than like if you were looking at a 4.5 cap return on a Burger King in Indiana, all with your cash, right? That's just like a very financial transaction. You may never even see the property. These folks are hands-on, and that's a totally different mindset. So they're getting very aggressive to keep their family businesses going.
Mm-hmm. And also, too, send us your questions, comments, and feedback to our email address, yourstory@basementtales.com with 2T. Again, yourstory@basementtales.com. We like to hear maybe some of your stories. We'd like to hear your comments, your feedback, any questions that you guys may have. So please reach out to us and make some comments. Thanks.